What's up, everyone? I hope you guys are all having a great weekend. In today's episode, I'm going to record my game plan for the week ahead and my watch list for Monday morning. Now, as always, I'm going to post a link for a 2-week trial in the top of the comments and in the description of today's episode. So for those of you guys who want to watch over my shoulder for the next 2 weeks and you want to demo the Day Trade Dash software, which is my scanning, charting, news, and our chat room platform, you can do the 2-week trial. So make sure you guys check that out. But I have some more exciting news. Tomorrow, Monday, May 19th, our Memorial Day sales are launching, which means for those of you guys who've been sitting on the sidelines waiting for the next sale to become a full-fledged Warrior Pro member or perhaps a Warrior Starter member, this will be a great opportunity for you guys to join. So tomorrow, Monday, make sure you come over to the website and check out those Memorial Day sales. All right, so with that said, let's go ahead and jump onto the screen share here. I've got my charts in front of me and I'm gonna start breaking it down. So let's go high level. Let's take a look at the last week. So last week actually was kind of interesting. It was a great week, $166,000. It was the best week of the month, not the best week of the year. My best week of the year was here in April with $200,000. And you know, on this week, I didn't have any record-breaking days. None of these were record-breaking days by any means, not for all time and not for the year, but it was just really solid consistency. You know, a couple of $50,000, $60,000 days, it certainly adds up. Now, last week, I had my biggest green day of the year so far at $85,000. I haven't had a six-figure day so far this year. I know, you know, other traders have, but not me. I've been a little bit more focused on consistency and taking a little less risk, which you can see from a consistency perspective has been paying off. One red day so far this year. So I feel really good about that. However, when you focus on consistency, you do sacrifice some of that upside potential. This is what I always say. You've got sort of two components of profitability that you're working with. You've got your percentage of success, which is your accuracy, and then you've got your profit loss ratio. So traders that have a really strong profit loss ratio, where they have like, you know, let's just say $1,000 winners, but only $100 losers, the way they do that typically is by hitting essentially home runs. But there's a lot of times where they're in a trade and they're up and they could take $100 or $200 off the table for profit, but they don't. They wait to see if the trade is going to realize its full potential. And it takes a lot of discipline to adopt that type of strategy because you have to resist selling when you've got a small winner. However, the choice to not sell when you have that small winner is typically going to reduce your accuracy. So profit loss ratio goes up, accuracy usually goes down. And then on the other hand, traders that have accuracy that's like 90%, a lot of times that's the result of being really stubborn. If they're in a loser, they keep adding and adding and adding until it eventually turns around. But that, you know, 10% of the time that it doesn't turn around, their losses are huge. So then they have bigger losers and smaller winners. But with 90% accuracy, they can still make money. So I'm kind of in between those two extremes with about 70% accuracy and profit loss ratios right now of about 3-1. If we look at year to date, you can see where I sit. And I, you know, to be honest, this is a reflection of it's my risk tolerance and my personality. And every one of you guys will have metrics that reflect where you're at, what you're comfortable risking, you know, and kind of what you prefer. So 73% accuracy right here with $1,900 average winners and $800 average losers. So a nice 2-to-1 profit loss ratio, 73% accuracy, $1.9 million of profit. I mean, I really can't complain. But my biggest single winner this year is $33,000, and my biggest single loser is $18,000. So, you know, these are not. I'm not going to retire on any of these types of gains and losses individually, but cumulatively, you know, 1,500 trades. If I keep doing this, I keep grinding, I keep showing up every single day. You know, another 6 months is going to be another $2 million. And, you know, then you get $4 million, $5 million years. And then it starts to add up, which is where we go back to seeing about 16.5, almost $16.5 million in the last 10 years. So about 1.6 million average per year, approximately. All right, so that's kind of big picture. Now, over the last week, We definitely saw a little bit of a shift. Even though it was a good week, there was a shift. At the beginning of the week, we were seeing stocks where we had a number of the continuation of the Bitcoin treasury, asset, cryptocurrency catalyst. Now, my problem with that was I sort of knew it would wear out eventually, that headline. UPXI, as I've mentioned several times, was one of the stocks that really kind of started this cycle where this stock went from $2 a share to $23, and it was on a private placement catalyst. Now, just yesterday, we had a stock, well, not yesterday, but Friday, we had a stock, now I can't quite remember the symbol off the top of my head, but I mentioned it during the recap. But in any case, a stock hit the scanners and starts to pop up. However, and the catalyst, by the way, was that they were going to be buying $800 million worth of Bitcoin. And I was like, $800 million? Okay, well, hold on just 1 second. This company was like a $3 a share stock with a 5 million share float. It's worth 15 million bucks, the whole float. So I'm like, how are they, do they have $800 million on their balance sheet to purchase that amount of Bitcoin? And it was clear that they do not. So I was sort of turned around at how they could even possibly, it was BMGL. The ticker was BMGL. How they could possibly have that type of news headline. And so what ended up happening was you could see right here how the stock popped up to 460 and then dropped all the way down to 220. So what I was concerned about was that companies would be kind of maybe, I don't know the best way to say it, but we're maybe coming to the tail end of that catalyst working when you're seeing a lot of companies kind of throwing that headline out. And this is something that we often see. This is sort of part of the cycle of hot and cold streaks, where when we get a headline that works really well, you have a stock that goes up 1,000%, then the next stock that looks similar and has a similar headline, traders are going to jump on it so fast it's not even funny. And understanding that psychology can make you a lot of money in the market because you know that that's what traders are going to gravitate towards, the next one that looks similar. So you get the first one, which is usually a surprise. You don't see it coming. And then the second one, which is sort of like very similar to the first one. And sometimes the second one makes an even bigger move because people had FOMO from missing the first one. And then you have the third stock that's very similar catalyst. And that gives you a big move. And then you have the fourth and the fifth. And then once you get to the 25th and the 26th and the 27th, the moves start to get smaller and smaller. And you sort of feel like companies are trying to put out this headline to see if they can boost up their stock price. And maybe some of the companies they're not really even that valid. Or maybe some of these companies are going to do a secondary offering as soon as the price goes up. So, that's when you sort of get to the end of this cycle. And I'm worried that that's what's happening here. Having said that, of course, the price of Bitcoin and cryptocurrency, strength in general is probably going to keep momentum, in that space, unless we see a massive correction in the crypto markets. And something that I'll tell you is that I've noticed that strength in the crypto markets has typically corresponded with strength in the small cap markets. And I think it's because both are sort of, they're both, I guess, speculative investment markets, penny stocks, small caps, cryptocurrency. And so they kind of seem that when one's doing well, maybe people have confidence and then they put out a little bit more money. And so they kind of all rise and then they all fall at the same time, which can be a challenge. But while things are going well, might as well, make as much as you can during this cycle. At least that's my opinion. So all of that is to say that although we started the week with some, strong momentum in this space, as we came to the end of the week with BMGL, it felt like maybe that momentum was getting kind of tapped out. So I am a little concerned that we could be coming towards the end of this catalyst being really effective. But the other catalyst that gave us a number of moves in the last week were Chinese companies, right? Because we have this Chinese trade, progress in the negotiations. So that's a big shift from a month ago. And for what it's worth, a month ago, it was just a month ago that the sky was falling, that the economy was broke and the stock market was going to crash. Let's not forget what the news was telling us. Sell, don't invest in the US economy, da 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 da. And now here we are, how many days later? And the market's now, well, where was the open for 2023? 2025, right around here? The market's now green on the year. We're not far off from all-time highs. So I would encourage you to resist the urge to tune in to some of the mainstream media and sort of when it comes to the financial markets, because there's so much clickbait. It's about getting views. And you see this on some YouTube channels as well, where they're like, the sky is falling, the market's going to drop in 30 days. Or this analyst predicts cryptocurrency is going to be 25,000, Bitcoin's going to be 25,000 by the end of the year. Why do they use that headline? Because it gets clicks. Why do they use it on, YouTube videos? Because it gets views. They do it on the more traditional media because it's what gets viewers. So that's how you capture people, with these salacious headlines. So one of the roles of a financial advisor, by the way, just, so you know, if you invest long-term, the role of the financial advisor, what do they do with your money? Basically, they just put it in the S&P 500. That's about all they do. I mean, these guys most of them don't do anything fancy. They don't do anything that custom for you. They put it in the S&P 500, and then they do, 15, 20% bonds, maybe a little higher depending on your age. But their biggest role is to talk you off the ledge when you're thinking about selling at the bottom. Their biggest role is to remind you of long-term trends in the market, that the market will go up, the market will go down, and don't look at your P&L on a daily basis. Just let it do its thing. Unless you're retiring tomorrow, let it do its thing. And if you were retiring tomorrow, then what a typical financial advisor would say is you shouldn't be 100% or even 80% in a volatile market like the S&P 500. You should be more in fixed income, where you're going to get predictable income during retirement. And you start, doing that transition. So, it's just one of these things. I've been through so many of these cycles, and I see it even on the YouTube comments where people will freak out and they're like, oh my gosh, the market's, crashing and this and that. And it's like, I've just been through it so many times that it gets a little old when you hear it from the news and you see it in, your Instagram posts or whatever it is. So that's a little bit of a tangent, but I just want to throw that out there. So overall market, S&P 500 overall, quite strong. Now, a month ago, we were focusing on small cap stocks that were domestic first, and now those are totally out of focus, and we're back to, seeing momentum on these Chinese names and, some other stocks that traditionally worked. So Chinese stocks, biotech stocks, and potentially still crypto-related catalysts are what I would keep a close eye on for this coming week. Now, I might grab my whiteboard here and go over a couple things. I got to turn on my whiteboard camera just up here. So, but before we do that, we can look at some of the top gainers or the after-hours movers going into the weekend. So it's always kind of funny when, Friday you have a big move on a stock, between 4 p.m. and, 8 p.m. because I can't imagine how many traders are still sitting around on, Friday afternoon. But in any case, MOVE, M-O-V-E. Oh, I got to link up my charts here. So MOVE, this was our leading gainer here after hours. And so you can see, obviously, this is a big move. There's no question about it. The only thing I would say is that when I look at this, I'm seeing a stock that basically spiked up from $1.10 to $2.10, so about 100%. Then drops back down, settles at around $1.70. It's a 6 million share float, and my question is, what's the catalyst? So, looks like board of directors initiates process to maximize shareholder value. That was on the 16th at 4:30 p.m. and so this popped up right at 5. Interesting. U.S. company. So I checked the address. Check the name of the CEO. Not to, but when you look at the name, sometimes you get a sense. Sometimes you'll have a U.S. company, but you suspect it's actually an international company with just a U.S. Maybe U.S. branch or U.S. office. So yeah, I see obviously that this popped up here with this catalyst. Um, hmm. So they're exploring a strategic alternative, including a sale, merger, similar transaction involving the company to maximize shareholder value. I think that that's probably not something I would expect to see a whole lot more momentum out of. SX, so I wouldn't look at that for first thing Monday morning. SXTC, a China pharmaceutical company. This is an old stock that we've traded a bunch of times. You can look at the daily chart, a number of reverse splits, a history of these big days where it pops up and then drops down. But on these days, it's gapping up. So pre-market, it squeezes up, and then the market opens and it sells off. So it squeezes up and sells off. So some of the days hold up a little bit better than others, but it's got this sort of long, well-established history of popping and dropping. So, how do you look at it down here? Well, it's hard. You can't separate it from that history, unfortunately. So it's possible, you could say, well, what's the short interest of the company? What's the float? Float's 500,000 shares. So I can just pull up the short interest real quick and just see, does it have unusually high short interest? And some of these will have higher short interest. And the reason they would have higher short interest would be because people believe it's just going to keep going lower and lower and lower. So every time it pops up even a little bit, they short it. But it doesn't appear to have high short interest based on the data that I'm looking at right now. So yeah, SXTC, I don't think that there's going to be probably a safe trade on that. But there may be some people that try it. But I think if you were familiar with its daily chart and its history, you probably would be cautious. ENVB up 18%, KWE up 16%. So these gaps are too small. All right, so that kind of gives us a walkthrough of, was there a stock that was squeezing up Friday after the close that we should be watching first thing Monday morning? And typically when there is, those move between 4 a.m. and 7 a.m. And then when most retail traders sit down at 7 a.m., you sort of decide whether or not there's still more potential in it. So I think none of those look great to me right now. Now in terms of the watch list, I like to look at recent IPOs that are moving and that have made big moves recently. Obviously, recent IPO top mover. So we're going to look at these, and then we're going to look at continuation names. So some of these, however, the float's going to be a bit higher. Now, one thing that you can note is that while the float is higher potentially on an IPO, most of those shares will be locked up. Certainly, insiders are not able to sell typically during usually at least 90 days, but sometimes longer. So that's something to be aware of. So these can trade as if they're a lower float stock because so many of the shares are just locked up and they can't trade on the open market. So there's sort of a interesting relationship here where you have the float of a company. So this is the float, the number of shares that have been issued, but then, a certain percentage of these, that was not a great line. So a certain percentage of these shares, let's just say whatever, this percentage, if these are held long term, then they're not really in the float because they're not being actively traded, right? So, and then you have some insiders who are holding and who are also long term, but maybe are locked out. So insiders here. So this would be long-term, maybe institutional investors that are like, I'm holding this for the long term. We're not buying and selling. And then you have insiders. And then you have sort of the free float. So one way to look at this, you can actually look at institutional ownership and insider ownership and subtract that off of the float. But that can get a little bit confusing because sometimes both will have warrants, which give them the right to accumulate more shares in the future, which don't contribute currently to the float. So it's not the easiest, but then the free float is even lower. So on a recent IPO, this insider percentage is typically going to be higher. And so the effective float as a result will be lower, which then means the stock could have a greater imbalance between supply and demand. Now, a stock that already has a pretty low float, like APUS, 8 million shares, then it's effectively potentially even lower. But you look at these charts, and this is very common with IPOs, that they do sell off. So there are retail traders with their brokers who can get in on an IPO so they buy the shares at the IPO price, and then essentially as soon as the stock IPOs, they sell. So there are retail traders that will sell immediately and just cash out. And they hope that when the company IPOs, it might IPO at 4 and then it starts trading at 8. So in a hot market, that's not uncommon. So if you got the shares at the IPO price, then as soon as it starts trading, you can sell them at $8 a share, and you're cashing out with a win. Now, a lot of brokers, and this is an advantage with being with bigger brokers, they'll get allocated a certain block of shares, and then based on the number of people that ask to buy shares, they divvy it up. So you don't always get the full number of shares you want. And it's a bit of a gamble because you don't know if the company will IPO at the IPO price, below the IPO price, or above the IPO price. So, you're kind of, it's speculative, but especially when it comes to a small cap stock. But on a bigger company that's IPOing, they often do open higher than the IPO price. So anyways, so we've got a few others here that are recent IPOs, but some of them are a little too expensive. This one's a little too cheap. I'm not seeing anything here initially that I'm like, I should definitely pay close attention to this. Well, CEPT would have to check the filings. Oh, it looks like it's a huge, a pretty large float. 24 million shares. $10 a share. That's big, but not too big. And then continuation scan. So it doesn't look like we're picking up anything off the recent IPO top moving scan. So we'll go look at the continuation scan. Continuation scan, these are some of the big movers in the recent weeks. ASST. I do think it's still worth watching. I would keep it on a side chart. This one had a high of up here around 892. So a little more consolidation than a curl. The 9 moving average is right there. So I would say ASST is worth putting on a side chart. So when I put a stock on a side chart, basically it's over here, and I'll go ASST, and then I'll just save this layout. So when I log out and log back in, this ticker will be right here on this window. So that's going to be over on another browser. Now you could always create a watch list. You could go here. I don't tend to do watch lists, but you could create a watch list. So create a watch list, Ross, watch list, whatever, save, and then you could start adding tickers to it. So ASST, and then just like that, you've got sort of a side chart watch list that you can be monitoring in case there's something on here that starts to move. So something to be aware of that can be helpful. So it depends what you want, and then you link it, and then if all of a sudden you see it starting to pop up, then you could pull it up. So ASST was a maybe. TOPW, this one, this was really wild on Friday. The way it squeezed up and then sold off. Chinese stock, right? Bitcoin catalyst. So I think I'm going to leave that one off the watch list because it sold off so hard. I don't think I would trust that one at this point. CTMX, this one is a little cheaper and the float's a little higher at 66 million shares. I'm going to leave that one off. CISO, a little too cheap for me. LICN, this is a stock that is the right price. I would add that to, let's see if it's going to add LICN. I'm going to add that to the watch list there. This is one that, it's a Chinese company. It's got a history of popping up. You've got a bigger green candle there. So it's kind of starting to show a little bit of strength. It popped up, it dropped down, but note the volume. High volume on the green days, no volume on the red days. Needs a catalyst probably, but if it broke over that high right there of 828, that would be interesting. So I would keep that on watch. Let's see. And then MWYN. This one's been, the problem with this one is that the whole ramp up, this move up has been on light volume. So I don't think so. BSGM, no. AVEA, no. See, now, at this point, these are getting too extended off our moving averages, so I don't think that's going to work. FMST. Let's see. Then you had IXHL. That was that one. Was it IQST? There was one. So I'm going to add IQST here. I'm just going to do this. So IQST, the reason I would add this one is because even though you'd probably look at this and be like, this is, I don't, well, what are we working with here? It's an up list. So it moved from OTC to the main exchange, NASDAQ, pops up from 14 to 34, okay, then sells off and is flatlining here. If it starts to pop up, maybe because the company puts out news, then what's our target? Well, you know, back up to this level, this level, this level, and then that level. And so now let's look at WeBuy. WeBuy had a very similar chart. So this is where, like I said before, you start to notice, okay, one stock does something crazy, and then you look for a similar chart. So WeBuy uplists or relists, squeezes up, sells off, and then starts to squeeze up here, goes from 11.50 all the way back up to 30 bucks. Okay. So now you sort of understand the basis of why I would keep that other one on watch. Maybe it doesn't do it, but if it does, I'll already kind of be thinking about it if it starts to squeeze. So I'm, you know, that's kind of, it has to start to move, and if it does, then I'm interested. Let's see, SYTA, this one, a little too cheap. I'm kind of looking at the ones that have lower floats. You could sort this by float if you wanted to. As it turns out, LICN is actually very low. SYTA, a little cheaper. Lucy, I've traded it before. It doesn't really seem to be that easy at this point to trade. CETX, leave that one alone. So yeah, I don't see anything else there. Okay, so that gives us these three stocks to keep on side chart going into Monday. And then, of course, I'll be watching this top gainer scanner right here because there may very well, there most likely will, be stocks that have breaking news on Monday and start to squeeze up. So then all of a sudden, if the stock starts to squeeze up and it meets my 5 pillars of stock selection, I'm going to be very interested in jumping in. So typically when I'm trading each morning, when I start, I'm looking at this scanner right here. So if I see a stock that hits the scanner, you know, whatever, INZY, this one pulls up on the scanner and I say, oh, what's the catalyst with this? It's going exactly sideways. That's a buyout. So the company's been bought out. So I'm going to disregard that one. So next one down, MDXCW. W stands for warrants. I'm not going to trade the warrants. Next one down, SYTA. So then I'm thinking, okay, this is the third leading gapper in the entire market. It's going to be pretty obvious. A lot of traders will probably be watching it. Is there a catalyst? Is there a pattern that I can understand? In this case, not really. But that's the process I'm going through each morning. So TSSI, this one, strong move after hours on Thursday, pulls back, and then the break of that level right there, 14, gives you that squeeze back up to the high there, and then pushes higher. 17 million share flow and a little bit more expensive, but not a bad pattern. So what I'm doing is looking at these scans to see where is their strength in the market right now. And when I see it, that's what I'm going to jump on. All right, so that gives you my watch list and the game plan for the week ahead. Again, as I mentioned at the beginning of this episode, our Memorial Day sales are starting on Monday. So make sure you guys check those out. And I'll put the link for the 2-week trial. It'll be pinned to the top comment and in the description, so you can do that. And you can do the 2-week trial and then join during the Memorial Day sale. That'd be fine. So either way you want to do it. Love to have you guys check out the community and the software here at Warrior Trading. And if you want to check out a couple other long form episodes I've recently uploaded that have been popular, I'll post those here and here. So thank you guys as always for tuning in. And a reminder, trading is risky. My results aren't typical. So please manage your risk by practicing in a simulator before putting real money on the line.